Okie dokie, everyone. Can I start off by saying either a good morning or good afternoon or even a good evening, depending on where you are around the world. And thank you and welcome for joining me tonight on tonight's latest episode of How I Got to Know Trading for Stratton Markets. Tonight's episode is called How I Got to Understand Fibonacci Retracement Part 1. Written by myself, of course, which is James Trescothick, and I'm the head of investment research here at Stratton Markets. Now, before I get on to my usual boring diatribe on who I am, an introduction to me, and more excitingly tonight's agenda, bear in mind I'm talking about online trading and CFD trading. And like with all types of investments, it does indeed carry a great deal of risk. So I do suggest you do your own research and your due diligence and know the risks at hand before entering any trade. With that out of the way, for those who know me, you see I've changed my picture. I've gone for the sultry black and white, mysterious look. I don't know anyway, I quite like the photo. It makes me look less old and less chubby. Anyway, who am I? Like I said, my name is James Trescothick, and I'm the head of investment research here at Stratton Markets. I have over 20 years experience in the financial service industry. I actually started off as a mortgage broker when I was a wee age of 18, less hairy and less wrinkly back then. I started off with buy-to-let and commercial mortgages, and I moved into pensions and alternative investments. Alternative investments is when I sort of found a bit more of my passion, and I moved into trading about 12 to 13 years ago. I'm obviously I've traded myself. I do trade, and I've traded commodities and options through Dubai Gold and Commodity Exchange, ran a floor at the Philippine Stock Exchange before I moved into portfolio management, etc. I still do, like I said, I'm a head of investment research, so I still do a lot of research on investments. But one of my duties is, of course, obviously the education, hence me being here right now. Now, I'm also a published writer, and I've been published in several leading industry publications, including the likes of Financial Times, Advisor, Market Watch, which is the Wall Street Journal, several magazines and newspapers. I'm also a very avid market commentator. Very passionate about this marketplace. I talk an awful lot about it, and yeah, I'm passionate about it. And I'm a well-known public speaker, and I've spoken at several industry events around the world. I'm not shy of an audience or a crowd. I've spoken in places like Singapore, London, Dubai, Kuwait, Kuwaiti City, that is obviously Qatar, KSA, South Africa, Joburg, Pretoria, Durban, Berlin, London, I might have said London already, etc. Now, like I say, part of my role as head of investment research is to write the education material and present series like this, and I've been doing this for over a year now, for Stratton that is, but I've been doing it for several years. Now, one thing I will say, unlike lots of educators out there who claim to be experts, I never claim to be an expert. Okay, because I don't believe it exists being an expert in this industry. If an expert was, they wouldn't be doing webinars, if you know what I mean. People like Warren Buffett, things like that. What I do with my education material I write and I present is I try and give it in a plain language and simple explanation, with the idea that I'm not giving you the secret answer or the holy grail. I'm giving you the information and the education material so you can go away, form your own decision and form your own path. Okay, like every teacher does. They want their pupils to be better than them. I am got a founded knowledge and I'm good at what I do, but like I said, I don't call myself an expert. So I try and share my negative experiences as well as my positive to give you a rounded, honest opinion of this industry. Anyway, enough about that. Now, tonight's agenda. Okay, like I said, we're talking about Fibonacci. So, of course, initially we're going to have the introduction on Fibonacci, what it is. Then we'll talk about an introduction on Fibonacci retracement, what that is. Then we're going to do a few examples, which I've chosen to look at today, where Fibonacci retracement can help you with some of your trading. Then we'll do an introduction into Fibonacci extension, followed by a few examples of Fibonacci extension, then future educational events, the remainder of April, followed by my usual question and answer sessions. Any questions, etc., please hold off to the end. So anyway, let me see if I can put myself on camera so you get to see my ugly mug. Give me a second. Can you see me? Ta-da! Yay, there we are. Oh dear. Looking old. Let me get rid of that so I don't have to see myself. There we go. Hide that away. Right. Okay. Hello, everyone. So, Fibonacci, what is it? Now, Fibonacci ratios are extremely popular amongst traders, and it can be a huge subject. This is why, like I said, this is part one. I'll do part two later at a later date, so we don't compass all the information in one go, because you guys will fall asleep and get confused. So it is a huge subject, so we're going to do it nice and easy. Now, it's first developed by an Italian mathematician by the name of, wait for it, Leonardo Fibonacci, back in the early 13th century. Now, what Leonardo believed, or he came to believe or recognize, that a series of ratios would represent the natural proportions of everything in the universe. Don't ask me how he came to this conclusion, but he did. Now, the ratios were developed from the following series: 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, and 144. When it comes to trading, Fibonacci can be used in two things, like I say, retracement and extension. Retracement levels are as follows: 0236, 0382, 050, 061, 0764, and so on. Now, don't worry, okay? You don't have to be a mathematician to work out these numbers. Fibonacci retracement and extension are indicators available on most trading platforms. And as long as you do it right, the numbers will work out themselves. And the indicator will display it for itself, for you. So you don't have to draw the lines or get your calculator out to calculate it. Now, Fibonacci retracement, this indicator, the belief behind this is that traders use Fibonacci retracement to try and spot potential support and resistance levels. Now, we all know the rules of support and resistance. Resistance acts like a ceiling where an asset will rise to touch, and the market starts to sell again, whereas a support will act like a trampoline where the market will fall, touch, and the market will start buying and pushing the asset back up. Now, like I say, you know, when they're using Fibonacci, they try and use Fibonacci retracement to spot the support and resistance levels to potentially spot an area of interest where they could enter or exit the market, or use it to set stop loss or take profits in these zones. And of course, as the name applies, Fibonacci is really used when the market technically is in a trend, either an uptrend or a downtrend. So let's look at some examples. I don't know, hands up who's sick of the Brexit at the moment. We all are. Now, anyway, I chose this currency pair, obviously the cable, British pound, US dollar on a daily. And despite obviously a lot of drama, we can see, you know, realistically he's beyond some sort of form of an uptrend. So here we have on a daily, and say initially we spot a potential uptrend here. What we do to draw a Fibonacci level is we choose the indicator on the platform, okay, and we connect. If our eye sees an uptrend, we connect the bottom with the top of that trend, and it looks a little bit like this: bottom to the top. By connecting the bottom and the top by using our Fibonacci retracement, straight away what you'll see is broken down into all our Fibonacci levels. The levels of interest, of course, the Fibonacci retracement is 61, 50, and 38.2. Again, the indicator we're drawing ourselves. So here we go, it's the cable. Drawing the uptrend here at straight away Fibonacci level is connected. So our potential support, because obviously it's an uptrend, so we're looking for the support here for possibly areas of interest for us to enter the market. We move on. Okay, we draw our lines. We have our 61, we have our 50, and we have our 38.2. So as we can see, as the market has come back, these areas of interest, these lines of interest, these numbers, 61, 50, and 38.2, have acted as some sort of minor support. As we can see there, the market bounced from that, bounced from that, bounced from there. So straight away, these Fibonacci levels here are giving us areas of potential support where we can then jump in to try and capture the continuation of the uptrend. Let's look at another example. This is the euro on a daily. This time, we're looking here, and this is not an uptrend. This is a downtrend. This time, using our Fibonacci retracement, we connect our top of the uptrend to the bottom of the downtrend. So it's like this, top to the bottom, and straight away, it gives us the levels of interest. This time, as it's a downtrend, we're looking at these levels act as resistance. So potential areas we could short the euro from the dollar. Let's draw this level up here. And as we can see, indeed, 38.2 has acted as a resistance when the market's retraced. The market is sold from that zone. And indeed, from our area of 50 has indeed acted as a resistance where the market has sold. And indeed, our area of 61.80 has acted as a resistance where the market has sold from. Let's look at one more example. Another example, got two more actually. This is gold on a daily. Okay, gold has been on a pretty much quite a nice uptrend since November. So again, uptrend again, let me get my laser pen. We draw from the bottom to the top of the uptrend. Straight away it fans out and gives us our levels of interest. And as we can see, our area in particular between 61 has indeed acted as a support. And every time the market's come from that level, the market has indeed bought in and pushed gold up higher. And one more example, again, another example of a downtrend. This is the loonie, the US dollar CAD on a daily. Okay, so again, we connect the top of our downtrend to the bottom of our downtrend, draws out our lines, our 61, our 50, and our 32. And again, as we can see, 61 has indeed acted as resistance, which again is a potential level for us to enter to short. 38.20 has indeed acted as resistance, a potential area for us to sell from, and so has 50 as well. So, whereas Fibonacci retracement traders tend to use to spot potential areas to sell from, Fibonacci extension is used slightly differently, because extension is used to potentially spot potential take profit areas where we should maybe tap out of the market. We use our retracement for entry and our extension for us to get out of the market. So let's go back to the British pound daily on the previous example. As we can see, we know our Fibonacci levels, we see our areas of support where we can potentially buy in from. There's our areas to support to buy in from. There's our areas of interest, the levels, but where do we potentially look to tap out of the market? Is we use retracement, and this is what we do. We see the area, we see where the retracements worked, but this time, what we do with extension is we do, if it's an uptrend, the high to the quick low to the next high. So the quick reaction, so the shape is like a V shape. And again, it gives us these same similar levels, 38, 50, and 61. So these are the areas we then know on our retracement, on our extension, where are potential areas of interest to sell or take profit. So we've done our Fibonacci retracement. We're now using our extension. As we can see, the extension has given us levels of interest where we could tap out on the market. And as we can see, our potential take profit is indeed where the market has actually gone to and then fallen back down is indeed around the 50, the 61, and indeed the 38.20 level. Let's do the euro dollar example. Let's go back to the euro dollar again as well. Let's have a look. Again, we have our same levels. We draw our extension. And this time, don't forget, it's a downtrend. So it's the other way around, up, down. Again, it gives us our levels of interest where the market will rise and bounce from. Again, this is our extension here, up, low, V-shape, gives us our level of where the market may indeed go to and start taking profit. And as we can see, indeed, it has been around the 38.20 level. But of course, it's not just, on the back of using the retracement. We can potentially use it if we're using our naked eye, if we see an opportunity. Here's the dollar Swiss franc again on a daily. This time, we're not using the retracement, we're not following the trend, but we're seeing potential movement here, the V-shape shaping here. So we use our extension, high to the low, back to the high again, and it gives us the areas of interest of around 38.20, 50, and 61, and indeed, 38.20 and the 50 level has acted as resistance, meaning that that's where the market is tapped out and taking its profit. Up and coming educational events for the remainder of April. Now, on the 9th, remainder of April, which has begun April, what I'm talking about. On the 9th of April, we have an episode called How I Got to Understand Risk Management. Again, that's a key one. I'm really keen on risk management, understanding technical analysis, fundamentals, all vital information, all very important to know. But unless you can control your money and control your risk, they're totally pointless. And on the 16th of April is How I Got to Grips with Japanese Candlestick Patterns. Going again a bit more technical because I think candlestick patterns is a worthwhile subject going over. And on the 23rd of April, I'm doing an episode called How I Got to Understand Momentum Indicators. Very good for understanding the difference between leading and lagging, and as well as trying to identify a trend. And on the 30th of April, I'm doing an episode called How I Got to Understand Pivot Points. Very useful episode again if you want to recognize another method of identifying potential support and resistance levels. Now, if you wish to speak to me, by all means, you can email me at james@strattonmarkets.com, or indeed, you can indeed follow me on Twitter or direct message me on Twitter. And my handle is @JTrustGothic. I sometimes do market commentary on that, market updates and things like that. So in my usual comic fashion. Before I move on to questions, don't forget I'll be talking online trading and CFD trading. Like everything, it does indeed carry a great deal of risk. I do suggest you do your own research and due diligence and know the risks at hand before entering any trade. With that out the way, any questions from you fine people at all? Anybody? Oh, yes, indeed. Colin, my good friend. How are you? Hi, Colin. Great to see you, buddy. Really nice to see you. Great to see you, my friend. Really is. Always a pleasure. Esteban, great to see you as well. Really is a pleasure to see you again. Thank you for coming back to this episode. Is there anybody like to ask me any questions or anything at all in relation to tonight's topic? Did I go too quick? That's my pleasure. It's my pleasure too, Esteban. It really is. Absolute pleasure to see you. Is there any questions? Anything anybody like to ask me in relation to this topic, maybe? Colin, great question. If everybody uses the same indicators, don't they become a self-fulfilling prophecy? The answer is yes, that's the theory behind it. That's why a lot of people tend to believe in indicators, because if everybody's seeing the same number, the same resistance, the same support, then the theory is there should be a good number of limit orders going the other way. Fibonacci in particular is widely used, and that's why it does occasionally work. It doesn't always work, of course, because there's other factors in the market, But yes, that is the theory behind it. If everybody sees the same Fibonacci levels, then clearly everyone's going to have their stops round about those zones. So that's where they're becoming self-fulfilling. Even though they are self-fulfilling in some ways, as you can see on some of the examples, those areas didn't always work. That's why you still need to be prepared for the unexpected. But yeah, that is the theory of why they work, is because everybody sees the same support resistance. That's right. That's the theory, definitely. Good question, Colin. Any other questions at all? That's a cracking question. Good question. Okay, did everybody at least enjoy it, found it interesting, found it useful? I didn't go too quick over anything. I kept my explanation pretty simple, hopefully. I mean, Fibonacci is quite an in-depth topic. Okay, this is, like I said, why I have split it into two parts. So it can be quite heavy. Did everybody find it interesting or useful, etc.? By the way, this is water, not vodka. It is water. Very useful. Oh, brilliant. Thank you, Colin. Glad you found it useful. Very good. How you getting on with your trading, Colin? Is it working at the moment? You finding your way, your own path? I tell you what, actually, let me ask Colin Esteban, because I see you almost every week. Okay, fair enough. All right. Remember, I say this to everybody, everyone I speak to, that trading is not a sprint; it's a marathon. Okay, so it's not a case of getting in there, you're racing to it. Obviously, you always got to be an eye for opportunities, and when the opportunities come, you've got to take it. But it's a marathon. Okay, it's not the person who gets to the finish line first; it's the person who gets there. It doesn't person get the finish line, but those who takes their time to get to the finish line. You know what I mean? It's building your portfolio up, not burning it out. So yeah, it's a marathon. And at the end of the day, the market, no matter what, is always going to be there. It's not disappearing tomorrow. Opportunities, mate, but there's always going to be fresh opportunities, as long as you understand it. So that's fair enough, Colin. As long as you're finding your way, as long as you're finding your path, things are making sense, you're understanding about yourself as well. You're getting to know a little bit more about you and how you react, and the style of trading which fits your lifestyle and your needs. That's what's good. That's what counts. Yeah, I do have a question. I'll tell you something. I was actually thinking when I was doing the Fibonacci earlier on, maybe it might have been quite good for me to do it live to show you how to get the indicators. Would you guys like maybe a live episode at some point where I can actually show you how to put these indicators on? I think that would be quite useful. Do a live demonstration of putting the Fibonacci together. May I do that in part 2? Would you guys, ladies, of course, would you guys, people, would you appreciate that? Would you like that? Would you find that useful? Brilliant. Well, we'll definitely do that, because I was just thinking how I was doing it. If it'd be good if I go step by step, bang, 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 that would be useful. In that case, we'll do an episode. Maybe we'll do a quick one on risk management, because that's a short one. Maybe we'll do a live indicator, either that or the candlestick patterns, actually. Perhaps we can look at a chart together live. We'll do a walkthrough of showing you the indicators, showing you the trend lines, and doing it that way. Yes, okay, definitely, we'll do that. I think that would be good because it'll be funny. I think it'll be, be quite a change in the norm of what I usually do. So we'll definitely do that. Is there anything else anybody else would like me to cover or like me to do in the future? Anything else people might find useful? Like setting stop loss, take profit. Everybody knows how to do that. Yeah. Does everybody know how to set limit orders on the platform? Okay, question. Does anybody use limit orders? Esteban, do you use limit orders? Cameron? Colin, do you ever use limit orders in your trading? No? Does anybody know what limit order is? Or pending order? Buy stop, sell stop. Anybody know what that is? Yeah, Cameron? Got a hands up. Okay, cool. Colin, you use limit orders, yeah? Okay. You know how to set them on the platform and everything in that case, yeah? Okay. How about you, Esteban? Do you use limit orders? No? Okay, is there any, I ask this every week, I do tend to try and remember as best as I can. Is there any topics, obviously we'll do the live walkthrough for the platform. Is there any topics in the future you might like me to cover? Excuse me. Don't forget, obviously, I write these episodes for the benefit of you find people to try and help. But if there's a subject or topic you'd like me to go away and write and present, then I'm more than happy to do. If it's something like that you want me to cover at some point, just let me know. Of course, like I say, you can, if you think of any questions or anything later, please feel free to reach out to me. Have a chat with my, email me on my email address or follow me on Twitter or whatever. Direct message me on Twitter if you would like to. If there's no other questions or nothing else you'd like me to cover, I'll sign off for the night. I'll let you guys get away. Can I just say a massive thank you to all of you for joining me tonight. I really thank you so much for taking the time out to spend some time with me. And at the same time, special shout out to Esteban and to Colin. Thank you for your questions and your interaction. As I always say, it gets a little bit lonely from my side. So it's nice to see a bit of interaction and questions. There's a cracking question about the self-fulfilling prophecy, Colin. It was brilliant. Great to keep the questions. And it's brilliant seeing you all again. I love seeing the familiar faces turn up every week. That's really great. Big shout out to Camera as well. Nice to see you again. So on that note, can I wish you either a good morning, good afternoon, or even a good evening, depending on where you are around the world. Till next time, every single one of you, trade safe.